Hi guys, hope you guys are good. So in today's video, what we'll be doing is a GBPUSD weekly outlook where we'll analyze GU from a higher time frame perspective, going all the way down into our lower time frames, with the objective of having to understand what to anticipate in this week's trading, right? As well as the following week. So the first thing that I do when I approach the market in the beginning of the week is I analyze my three major higher time frames being my monthly, my weekly, and my daily. And the reason why I really like these time frames and why I'd consider them as my favorite time frames is due to the fact that they reveal to me what smart money is actively trying to do within the market. So we already have an idea that smart money is always trying to do two things, which is firstly order pairing, which essentially means that they're trying to enter the market at specific points of liquidity, right? They're trying to enter against specific points of liquidity. And it would have to be higher time frame liquidity due to the fact that that's the time frame that possesses the larger amounts of liquidity. For example, if we're looking at a monthly low like this and comparing it to a 1 hour low, it's clear that the monthly time frame low would possess a larger amount of liquidity, right? Because there's more investments at that point compared to a 1 hour low, right? So that's essentially why we're looking at our higher time frames. The second reason that second thing that smart money is trying to do is they're trying to order book, which essentially means that they're trying to book their profits at specific points. So we already have an understanding that they're trying to book at points of fair value, which exists as inefficiencies and all of those sorts of things, in which we'll get into, right? Another thing I'll be doing for you guys is I'll be showing you my DXY analysis in order to give you guys a perspective of what I am anticipating on the dollar. And for those of you guys who trade pairs associated to the dollar, you could get a few ideas and go further, analyze or investigate whatever foreign currency pair you're looking to trade, right? So I do hope that through my analysis, this will give you guys an understanding of how I analyze the market, and maybe you'll get to learn there and there, all right? But with that being said, if you do have any questions, please do leave them in the comments. And yeah, a few of the things that I will be talking about, I've already done videos on. So if you don't understand something, just go through my video catalog and you'll just see it, right? So let's get into it. So on a monthly time frame perspective on GBPUSD, we can see for I think a year or two we were in a bearish institutional order flow, and then we resulted in this bullish institutional order flow over here. So what does this mean? Essentially, this means that smart money was actively selling in a deep premium to sell as to distribute as well. So actively distributing at in a deep premium in order to reach discount. So if you're selling in a deep premium, you want to be taking profits in a discount price, right? So we see they delivered by actively selling as to reach this external range liquidity over here, these sell stops where they then order book, right? They'd scale out their positions. So this point is significant because it possesses sell stops. This is a point where they'll start to order pair, which essentially means they'll buy against these sell stops, right? So that's how we start to see this bullish delivery, right, in price action. So we understand that the way the market moves is it moves by reaching into external range liquidity. After it does that, it has to reach into or draw towards internal range liquidity. But before we get into that, we can see that in this discount price over here, these discount prices, there's this fair value gap over here that the market rebalanced, right? So these are specific points where smart money will be entering the market as well. So we understand that it's also in discount, so they'd be actively buying these points in order for them to reach a point of fair value, which is in premium for them to take profits, right? So getting back to the external and internal range draws of liquidity. So we understand from external, we then draw towards internal. We draw towards this point over here. That point exists as internal range liquidity due to the fact that it's a fair value gap. So internal range liquidity exists as fair value gaps in order blocks, those sorts of things, right? So my bad. So we see that this point over here gets filled, right? And like I said, they drawing price to a point of fair value for them to take profit. So points like fair value gaps and all of those sorts of things, those points are points of fair value for smart money to actively be looking to take profits. So that's why when it reaches into this point, you start to see it weaken in this manner, right? This is a point where they've started to scale out their positions that they have been accumulating from these points, right? So, like I said, when it comes to points of internal range liquidity, it exists as fair value gaps, but we can see here we have two fair value gaps. So, of course, the first question becomes which one is most likely going to be respected. And the other thing as well is we do have this order block in deep premium, right? Which is another point which is likely going to be uh, drawn into, right? So we need to investigate where's smart money actively looking to draw towards? Is it likely that smart money would want to continue higher as to reach this order block? So let's investigate that. So we see after this order block, we just got sell side delivery, right? And the moment you start to just get sell side delivery, that's signaling an inefficiency in price action. We understand that the way the market moves is it's always trying to reach a point of efficient price delivery, right? So the moment you start to see an inefficiency, it's regarded as a liquidity void, right? And the reason why it's regarded as a liquidity void is due to the fact that you're only getting sell side delivery, and eventually in price action the market will move in such a manner that it will go towards that point as to fill that inefficiency, right? So eventually we're looking for this inefficiency to get filled, so there is a likelihood that the market may draw towards this order block in order to fill the inefficiency, because this order block represents the last point of efficient price delivery. Right after that you just got inefficient price delivery, right? Another thing, 2 weeks ago, I released a video where I was speaking about high resistance liquidity zones against low resistance liquidity zones, right? And if you haven't seen it, please do watch that. So I was explaining in that video that points of inefficiency like this, where you're only getting one-sided delivery, those points are points that are also considered as low resistance liquidity zones, right? Which essentially means if you're going to be actively buying, right, you're going to be actively buying against low resistance, and that's exactly what we want. We don't want to be buying against high resistance, but low resistance, right? So this would be regarded as a low resistance liquidity zone until this inefficiency gets filled. So there's a likelihood that we may see price wanting to deliver as to reach into that monthly order block, right? Because we'd basically be trading a low resistance liquidity run into that order block, right? But with that being said, let's continue to investigate it, right? So we see that the market delivers into the monthly fair value gap, price weakens, gets into this order block over here. We will explain, uh, we will look into that on the weekly time frame, so it's much clearer, right? And then we start to see a bit of a bullish delivery. One thing that's significant is we start to see that this point over here, being this monthly high, the liquidity over there gets taken, right? So that's regarded as external range liquidity, which essentially means that there's a likelihood that we want to draw into the opposite direction, which means filling a fair value gap, this fair value gap over here. So we got 2 points of interest, right, that smart money would actively be wanting to draw towards, which is either smart money is going to trade into this fair value gap or disregard this fair value gap and trade higher as to reach that monthly order block, right? So let's further investigate this. Let's go down into our weekly time frame. Okay, cool. So this is our weekly time frame, and already we're starting to see that things are a lot clearer, right? We can see that these sell stops, that's where smart money actively bought against, they order paired, the delivered price higher, we accumulated here in a monthly fair value gap where they were actively buying, right? And we can see that they were actively buying due to the fact due to the fact that we see this inefficiency, right? But we continue higher and price reaches into the monthly fair value gap. So already, what do we see the market doing? It delivers lower, right? And it delivers specifically towards this last bearish candle over here. And why is this point very significant? This point is significant due to the fact that, firstly, it's a weekly bullish order block, right? So let's just note that. So this is our bullish weekly order block, right? So that's the first thing, weekly bullish order block. And like I said earlier, smart money was actively buying at this point, which resulted in what? This only bullish, this one-sided delivery over here, right? Which is, excuse me. So once we see that at this point, right, this is right after this, we just started to see a bullish delivery in price action, right? There's only green candles over there, which is signaling what? The same thing we were investigating on the monthly time frame, which is our liquidity void. But at this point, we see that price actively filled the void and it got filled, right? Making this order block very significant because of that liquidity void over there, right? I hope that makes sense. So we reach into that order block, very significant point. What starts to happen after that? We then notice that this candle over here gets rejected. Its low gets rejected over there, but instead these candles trade lower than the open price. This is regarded as a rejection block, right? So this is a weekly rejection block. And essentially, what a rejection block is, it essentially just works like an order block. The wick itself works like an order block. So what you're seeing is that price, what smart money is very interested in, is the liquidity below the bodies of the candles, not the wicks, the bodies of the candle. So it takes the liquidity that's at the open price, rejects the low. So this whole rejection here is basically seen as an order block. We see the market reject that point and it delivers higher, right? So now we see a delivery higher. We continue, there's a fair value gap that gets filled, price continues, we accumulate, we take these buy stops, right? So not much is clear. The only thing that we see in recent price action is that we did hit this order block over here. We rejected it, right? Another thing we see in current price action is that we have this weekly fair value gap that we are respecting a bit. So we then want to investigate the likelihood of price having to respect this fair value gap in order for it to continue lower in order to reach this monthly order block, I mean fair value gap here, which is one of smart money's objectives, or disrespect this point and use it as a support to continue higher in order to reach that monthly order block. So that's what we need to investigate further. So let's go down into our daily time frame, right? Okay, cool. So daily time frame, we're coming off of that weekly order block. Can you see on the daily time frame, it's this massive order block. So we reach into that massive daily order block, right? This point over here, we hit the order block. Price gives you a market structure shift. This is that rejection block. We get a market structure shift over there. Price is rejecting the low, signaling movement, a bullish movement of price, right? Of price delivery. So we deliver higher and we deliver as to reach into a point of premium prices because they'd taken all of these sell stops over here and they actively bought against those sell stops. Now, where would they want to take profits? At a point of premium prices, right? So that's why price delivers all the way up here as to reach these premium buy stops so that they can take profits at these points. So now we start to see a accumulation of price then continues higher, makes a low, continues higher to take the buy stops. Right after that, we start to see a delivery of price lower, right, as to reach these daily sell stops over here, which are in discount prices. So one thing we have noted for sure is that price is of course bullish, and there's a likelihood that they've sold against these sell stops in order for price to reach a discount price where they'd most likely take profits and then now accumulate new longs. And already this is giving us a signal due to the fact that we see that the month, or I mean the daily time frame has given us a market structure shift over there, indicating the likelihood of potentially wanting to switch and continue higher. We see that the daily fair value gap got filled over here, giving us a signal that now we may start to deliver
higher as to reach um, premium prices, right, of potentially this leg. So you already have a premium point over here, which exists as buy stops, in which could be a draw on liquidity. So already this is a signal, first signal that we may disrespect this weekly fair value gap. Another signal we can go into is this, right? If we just study SMT, I did release a video on this, so do check in my video catalogs in order to find those videos where I'm talking about SMT divergence, all of those sorts of things. We can see in terms of just divergence alone that the DXY made a higher high over here, but notice how GBPUSD did not make a lower low. This is signaling what? That this is a non-symmetrical market condition, indicating that there's a potential of a reversal, right? So this is giving us a reversal. It basically means at this point, smart money actively accumulated long orders, right? Smart money actively accumulated long orders. That's why you didn't see price deliver lower below that point over there. So there's a likelihood that price is potentially indicating that we may continue higher. So there's a possibility, right? A possibility that that weekly fair value gap will just get disrespected and smart money will just continue the market higher as they reach these buy stops and potentially reach all the way up there, right? But we still investigating all of this. But with that being said, let's go into DXY and see what the DXY is saying. So if we're looking at the DXY, we can see that we're coming off of a weekly extreme point or a very important point. We have taken monthly buy stops over there. So this essentially means that smart money would then distribute at this point. We got a market structure shift, indicating that price is most likely going to be reversing, signaling that, of course, right? We pull back into a fair value gap. So there's a likelihood that we may start to want to distribute lower, right, as to reach points of discount, right? Because we got to sell in deep premium, so we might reach discount prices. This might be our draw, and long term we may draw towards these lows over here, right? So we're getting sell ideas off of the DXY. So that essentially means that on GBPUSD we could potentially be looking for buying opportunities, right? But let's go on to the 4 hour, right? So on the 4 hour, we can see that right before the reversal, we can see that price took these sell stops over here, which is essentially order pairing, right? They bought against these sell stops, which resulted in this daily market structure shift, indicating potentially we may start to seek bullish delivery, right? So after that, we see that price delivered back into this daily fair value gap, but most importantly, it filled that 4 hour order block over there, which resulted in a move higher as to reach these buy stops, right? I did take a buy earlier on and reaching into those buy stops over there. So already we're getting an indication that we may respect points like these, the mitigation block over here, right? This would be regarded as a mitigation block. Or if we disrespect these points, we may draw into a deep discount to take discount. Sell stops in deep discount to continue the market higher, right? We may draw into this order block, respect it, and then continue higher. So those need further investigation. But one thing is for sure, notice how that after all of this move higher, we just got an extreme movement of price lower, signaling what? An inefficient price delivery. What does all of this signal? That this is a low resistance liquidity zone. Implying what? If you're going to be buying, you're going to be buying against low resistance, right? So this is a low resistance liquidity zone, which is very good, right? You want to be buying, actively buying against low resistance, right? So let's go a bit faster. So these are the points we'd most likely be drawing to, right? We can see already very, very important points that I'm looking into is this order block, daily order block over here. We may pull back into this daily order block in which we could continue higher, which is aligned with that mitigation block. And like I said, we may come into this order block, and if it's giving you indication to continue bias, do so, or we could come into deep discount and continue prices higher. But with that being said, of course, I couldn't go through all of this because I'm out of time. But kind regards, the architect.